As a saver, I am all in favor of higher rates.
Jack Yates, let me ask you something. This story that's out and about, $3.5 trillion in retail and institutional money funds. Now, that is such an extraordinary thing, and I look at that. I mean, it is bloating MZM and M2, but the velocities of those monetary aggregates are crashing, so I'm not worried about it. I just see people rushing in to be risk-averse, and that money's kind of on the sidelines, ready to rock and roll, Jack. Now, Herb isn't taking that into consideration, but isn't that a possibility here? You could have an explosive stock market situation if that money comes back into play.
Absolutely, and you mentioned the junk bond spreads before. I think part of that is junk's never looked so good. You look at some of the companies now with junk ratings. I mean, as you just said, Ford broke even today, or they gained a little bit. It's ridiculous how hammered down everything's been. Everything from fixed income to equities to China to everywhere has been absolutely hammered. And we're looking now at a bottom and trying to form a bottom. We are almost 10% off the mat here. It's time for the economy and investors to start getting up off the mat and start swinging.
Jay Bowyer, is Obama looking at a bottom? Or are they still trying to find the bottom?
They might be worse than the housing market. They might be falling like the house from The Wizard of Oz. I mean, that's definitely a factor here. And I think we've found out from Pennsylvania just how deep the divisions are in the Democratic Party. The media often talks about the divisions in the Republican Party. We've got our nominee. That's done. I mean, we've been united for some time. The Democrats have very serious divisions. They have race, gender, age, class divisions, and not ideological divisions.
Go easy on the age.
Okay.
Go easy. I'm very sensitive to the age, but the rest of it's okay.
Okay. So you don't just heal that. You don't just heal that with a nice convention. You just don't heal that by taking a certain position on an issue. I mean, these are very deep divisions in the Democratic Party that go back 40 years, that go back to the riots of '68, and it spells serious trouble for them in November.
So, I mean, I don't want to take this too far, but maybe a part of me does, Don Luskin. The McCain surge starts in late January. That was the first bottom in the stock market.
Right.
The second bottom in the stock market was in earlier middle March after the Bear Stearns J.P. Morgan deal and the Fed opened up the discount window. Is there a correlation between politics and the market?
Yeah, I think there is in the long term, but I think there's a lot of noise right now that's making that correlation very, very hard to really pinpoint. We really do have a serious credit crisis, which as late as mid-March did pose systemic risk to the world capital markets. And, Ronald Reagan could come back from the dead and announce that he's going to be the next president, and if the Fed hadn't done what it did to bail out Bear Stearns, there was going to be a global depression. So, yeah, politics are important, but they've been in the back seat. But the interesting thing is, now that's going to come into more focus, because as the credit crisis now steps back, what's going to come center stage is the political scene. And I have to say, I'm not thrilled about that. Because
one thing, though,
McCain has yet to articulate a clear, compelling economic message, and the Democratic economic message is just a suicide pact. So this is going to be dicey.
Larry, the one thing I want to add just to what Don was saying on the credit crisis, and it ties in, I think, what Herb was saying earlier, and why financials are rallying. I think that's a very good question. Why are they rallying? Because the financing rates with which financial institutions are based, LIBOR, is significantly higher than it was before. And one of the things these low rates that most people on the show here have poo-pooed is that they have reduced, reduce financing costs for institutions.
How much higher, though? I think this LIBOR thing is overrated. How much higher?
Larry, let me put it this way.
25 basis points?
No, much more than that. There was 7 basis points over Fed funds last summer. It's going to possibly be 100 over. That's a huge problem.
But we can't find that 100 over. I mean, we've got
the spread doesn't matter. It's the absolute levels. The absolute levels are far lower today than they were.
That's incorrect. That's not true. The spread and the level both matter.
Joe, isn't it? Look, you may be right.
Not to what you were talking about.
No, the spread reflects the fact that people aren't lending. Well, no, on the mortgage rate, Don, it does matter in terms of resets being set to LIBOR. LIBOR is still a very important benchmark
but mortgages don't reset to the spread. They reset to the absolute level.
Right, but the absolute level, Don, is higher. LIBOR is 290.
Yeah, but it's only
higher than what? It was higher. It's not high. It's not what you said. It's not higher than it was last summer.
Yeah, it was 6% last summer.
It is.
It was 6% last summer.
And it came down because the Fed cut. That's what I'm saying. These low rates have helped. But the point is there's still incredible stress in the money markets, and I think the market has completely forgotten that.
All right, we're going to go out. We got so much more work to do.
It's forgotten because it's not important anymore.
It's not that low rates don't help. It's that as we move towards normalcy, everything gets more normal. That's the key point.
There you go.
Governments and corporates have to readjust. Mortgages have to readjust. We're going to stop this pillar-to-post swinging. Everybody's going to stay. Much, much more work to do. By the way, I want to talk about this wacky Shanghai, China stock market, up 9% and change today on a tax cut. Well, heck, maybe we ought to try that here. Cut taxes coming up. Much more of our market all-stars waiting in the wings, ready to make you some dough. Then we're going to talk politics and taxes with our favorite House Ways and Means Chairman, Mr. Charlie Rangel, if he can get here from all his House votes. Plus, how can the Democrats stop the Obama bloodbath? Will their fight against McCain push him into the White House? That's what the markets are hoping to say. We are for keeping America great and prosperous. Kudlow and Company, we will be right back.